In this video, we'll be taking a look at future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade first professional, check out our complete Forex trading course on Udemy. I have a link attached in the description below as well. So today we'll be starting with a gold chart on a 30 minutes time frame. I know I hardly talk about trading on the 30 minutes time frame or lower time frames, but the reason why we're doing this is because gold has been trending bullish for the past few days now, or few weeks. So we're kind of tracking the 30 minutes moving average. Remember, I used the 200 EMA and SMA as a fine-tuned area of support. So right now we had a good bounce off of the 200 EMA and SMA, and I do think gold is gearing up for another bullish momentum. So if I pull up a few levels here, so you notice that this is an area of value where we had that sweet bounce from the 200 EMA and SMA moving average. And if you pull up a trend line like this, you'll notice that we've had a breakout. So a good bounce of this level, followed by a breakout of the structure. Now we seem to be consolidating above this descending triangle, if you will. So right now, I do think there's a good chance we get maybe a slight pullback down into the 200 EMA, followed by a bounce to the upside, right? And that would be an opportunity to go long. Alternatively, to go long, I would recommend, maybe taking a level here around this area of resistance. So this is an area of resistance, right? So there's a good chance we get a small consolidation. So small consolidation when market opens, followed by a good breakout. So when this happens, you want to go long around the breakout of the area of value. Stop loss, should be placed underneath the consolidation list of the breakout, or underneath the 200 EMA, right? So the blue line. That's because the blue line would have probably crept up by the time we break out. So stop loss can be placed above there, and you can aim for as high as 500 to 1,000 pips take profits. Remember, currently in an all-time high, so there's no way to actually gauge or determine where your take profit is going to be. So you just trail as we go higher. 500, 1,000 pips, realistic target, and you should be good. So that's my bullish case scenario for gold. So there's one more thing to watch out for. There's a good chance we get a bearish breakout, but the only reason why I'm considering a bearish breakout is not because I want to go short, it's because we may get a better opportunity to go long, right? So if you go down to the 1 hour time frame, for example, the moving average is still a little bit far from this area of value. So there's a good chance we also creep downwards, right, into the moving average before we get that bounce to the upside. So this would potentially give us a better entry for a bullish trade opportunity, aiming for 2,000 pips. So if you want to go for a solid swing trade setup, this is something to watch out for and go long when we hit these moving averages on the 1 hour time frame, right? So that's it briefly for gold. Mind you, I wouldn't be going short just because there's a possibility that this is going to happen. Meanwhile, on the 30 minutes time frame, if we consolidate longer, so 30 minutes time frame, if we do consolidate longer around this area of value, right, it gives the moving average on the 1 hour time frame enough time to creep upwards into those levels to matching up with the moving average on the 30 minutes time frame, or this area we are over here. So something to pay attention to while you are paying attention to the moving average on 30 minutes time frame and watching out for a breakout of this area of resistance. Also watch out for a good bounce from the moving average on the 1 hour time frame. Moving on, we're talking about Nasdaq. So this is a Nasdaq chart on the 1 hour time frame. Seems pretty decent. We've been in a solid bullish trend, and right now we just took out this long-term symmetrical triangle. So this is a big consolidation, lower highs, higher low, good breakout with volume. Now seem to be going higher. So the reason why this is happening is because of the anticipated interest rate decision coming up this week. So it is anticipated that the Federal Reserve is going to start cutting rates. So I think that's probably going to help Nasdaq gain more bullish momentum to the upside, right? So how do we pick our trade entries? So on the 30 minutes time frame, again, I think that's the best chart right now on Nasdaq. If you pull up our moving averages, so 200 EMA, 200 SMA, you can see that since we broke out from this symmetrical triangle, we've been tracking this moving average quite nicely, right? So if you want to go long, I have no idea when it's going to happen. Nasdaq also is also on at all-time highs. So there's no clear levels to, gauge, take profit levels, but we can get a good clue as to where we could take our trades. So for me to go long, simply hope that price gets into this moving average. So the 200 EMA, 200 SMA on 30 minutes time frame, followed by a bounce. So when we get a bounce, that should be a confirmation to go long. So by that time, moving average should have crept upwards like this. And this gives you a tighter risk to reward ratio because you can go long after the bounce and your stop loss placed underneath the retest, right? So it gives you a tighter risk to reward ratio because you could aim for as high as 500 to 1000 pips. So this 500 pips over here, right? This 500 pips over here, and 1000 pips would be placed around these price levels, which is a realistic target in my opinion, considering the fact that we are getting an interest rate, cuts this week, right? So there's a good chance we dump into the moving average on 30 minutes time frame and then bounce off hard. This will give you a risk to reward ratio of SL approximately 80 pips to 100 pips. So 1 to 5 to 1 to 10 if you must. And this is how I'm going to go long on Nasdaq. So for me, I wouldn't be going long because I'm already in. So I went long over here. So I have a position stacked here and another one stacked here at the breakout. So right now, I just want to hold my positions, see if we do get a bounce, then go higher. But alternatively, where things start to look funny would be if, price comes into the moving average, consolidates a little, then get a bearish breakout to the downside. So this is going to be going to be an unrealistic move because interest rate cuts simply means price tends to go higher, right? So that's why I think just before we get the interest rate cuts, there's a good chance we tap into the 30 minutes moving average on the 30 minutes time frame, then bounce higher as the news comes up, right? But if the market doesn't take the news well, so there's a good chance we come here and we just get a steady news event, right? And we get a flash move to the downside, which could open up for a nice sell trade opportunity. But for me, I won't be going short because this is still bullish. So that short or that breakout could be short-lived, maybe coming to this area of value before we get another nice bounce to the upside in continuation of the trend, right? So something to pay attention to just while you are going long. So a good place to place a stop loss will be underneath the moving average on the 30 minutes time frame, where you hope that we go higher because it's clearly a bullish trend. If not, I can see I can see some reasons why we may break this moving average, aiming for lower price targets like this area of value over here for a bounce for going higher or a retest of this broken trend line. So just something to pay attention to. But for me, overall I'm bullish, and this is my current outlook for Nasdaq. Moving on, we're talking about GBP-USD. So GB-USD, it's a no-brainer, still in a very solid bullish trend. You see over here, higher highs, higher lows. We just nabbed this area of support. So we have an area of support here, good bounce. Now we're trading around this area of value, and we seem to be creeping towards the area of resistance. So over here. So for me, I'm going to go long, right? I think this is one of those opportunities I'm going to take from currency pairs. So I'm going to go long when we take out this area of resistance. So when we take out this area of resistance, I think we're getting those consolidations I do talk about right now. So if we get a breakout from this area of resistance, I am going to go long immediately after the breakout. You can see I have my alert set here already, and my stop loss would be placed underneath these lows, while I aim for a take profit target of these highs and trade the rest of my positions as we go higher. This is a bullish trade opportunity for me, and I don't have any reason to go short. So that's the reason why I'm going to stay bullish on GB-USD until something else, changes my mind. But for now, chart looks bullish. When we get a breakout from this area of resistance, I'm going to go long, aiming for these highs first, and trade the rest of my positions as we go higher. Mind you, my entry is going to be after the breakout. Stop loss is going to be placed underneath this lows over here. That's the briefing for GB-USD. If you have questions, please leave them in the comment section down below. Lastly, we're talking about EUR-USD. So EUR-USD, this one looks doesn't look as neat as I want it to be, just like we have on GB-USD. But something to pay attention to is there are similar charts. If GB-USD goes higher, breaks out, then there's a good chance EUR-USD breaks out as well and go higher. there's also a good chance gold goes higher. And all these, if this plays out as I expect, it means the DXY is likely going to tank this week, maybe probably as a result of the interest rates cuts. But just pay attention to these charts and these assets as we move forward within the week, right? Especially as we go towards Thursday or Wednesday. I think it's either Thursday or Wednesday. That's when we're going to get those fundamentals, right? So for EUR-USD, the best place to go long would be waiting for a move like this, followed by a breakout. So a breakout from this area of resistance, so here and here, would be a good opportunity to go long. So I'm going to go long when we take out this area of resistance. So I'm probably going to go into this trade just as I would go for GBP-USD. I know it's counterintuitive because they are both going to move in the same direction, but I think I'm going to, take both opportunities and see how the market reacts or how the market evolves. So I'm going to go long here. Stop loss will be placed underneath the consolidation list of the breakout, and I'm going to trade the rest of my positions to go higher. So I'm going to be aiming for at least 300 pips on this one, right? So 300 pips would be approximately from here over. Yeah, so right, so it doesn't seem like too much of a stretch. So 300 pips target here, and this will give me a decent risk to reward ratio of 1 to 3, right? So sounds good to me. So 100 pips stop loss with a potential 300 pips take profit target. That's how I'm going to trade EUR-USD this week, as well as GBP-USD, gold, and a Nasdaq. Mind you, for gold, I'm already in on long positions around these lows. So on the 30 minutes time frame, yeah, so I'm already in on longs at this price level. So if we do get a break below, I'm probably going to hold my positions till we go down to the moving average on the 1 hour time frame, where I strongly believe we're going to get a bounce. So that's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like professional, check out our complete Forex course on Udemy. I have the link attached in the description below as well. That's it from me guys this week. See you next week.